picture this. It's August 2018, and Ghana's entire financial world gets totally shaken up. It was like the ground just opened up and swallowed 7 major banks. This story was everywhere. But the real story, well, as we're about to find out, it's way more complicated than what you saw in the headlines. So you've got to ask, right? How does that even happen? One day, these banks are huge pillars of the economy, and the next, poof, they're just gone. Was it really this sudden, out-of-the-blue shock? Or was there something deeper going on, something festering under the surface for years? That's what we're going to dig into. So the official story we all heard was framed as this dramatic but necessary intervention. The Bank of Ghana called it a systemic cleanup. The idea was that they were stepping in to save a fragile financial system from collapsing on itself. This was the narrative everyone saw on the news. And we're not talking about small-time players here. These were the names right in the middle of the storm: UT Bank, Capital Bank, uniBank, plus 4 others. I mean, these were household names, places where people had their life savings. And just like that, they were wiped out. Okay, so the big question is why? Why did they collapse? Well, the Bank of Ghana laid out a very clear set of reasons. This was the official story, and it pointed the finger at some really serious problems inside the banks themselves. Let's break down exactly what they said happened. It really boiled down to 3 main things. First, they were poorly capitalized, meaning they just didn't have enough cash reserves to handle any kind of shock. Second, they were handing out bad loans like crazy, especially insider loans to their own directors and related companies that were never going to be paid back. And third, a total failure of governance. It was all about personal greed, not about keeping the bank afloat. And listen, the Bank of Ghana's Deputy Governor, Elsie Ado-Awadzi, she did not hold back. She called it a moral crisis. Think about that for a second. This wasn't just bad math or a few mistakes on a spreadsheet. She was saying this was about powerful people putting their own wallets ahead of their customers and their own staff. All right, so that's the official story. It's neat, it's tidy, and it tells you exactly who to blame. But, and this is a big but, that's only half the picture. Now, let's pull back the curtain and look at what was really going on behind the scenes, the stuff that didn't make the evening news. The first thing you need to know is that this did not happen overnight. The idea that these banks just suddenly failed in 2018 is a total myth. This wasn't some sudden heart attack. It was way more like a slow, chronic illness that had been spreading for years, completely out of public view. There's actually a term for this: pre-existing rot, and it means exactly what it sounds like. These banks were already in deep, deep trouble long before the final collapse. But instead of performing surgery, regulators were just giving them cash injections, what they call liquidity support, to keep them breathing. They were just kicking the can down the road, delaying the inevitable. So let's just compare the 2 stories here. The public saw a sudden crisis caused by bad management. The reality was years of decay being propped up by temporary fixes. The public was told that 7 banks had simply failed. The reality was that the government had to literally create a new bank just to absorb the mess, and that cost was passed on to the taxpayer. And that brand new bank was Consolidated Bank Ghana, or CBG. Honestly, you can just think of it as a giant state-created Band-Aid. Its only job was to take on everything, the assets and all the debts from the failed banks. Now, it was a necessary move to stop total chaos, but it meant that all those private sector failures suddenly became a public problem. You know, beyond all of the financial jargon and regulatory moves, this crisis had a massive real-world impact. This wasn't just about numbers on a page. This was about people's lives, their savings, and their jobs. Let's take a look at the very real human cost of this collapse. 1.5 million. That is the number of depositors who were directly affected by this. 1.5 million people who woke up one day to find their accounts were frozen or moved, who had no idea if they could get their own money out. It's just a staggering figure. And what about the employees? Thousands of them lost their jobs overnight. And many of the ones who were lucky enough to get rehired by the new Consolidated Bank, well, they often found themselves on worse contracts with way less security. Their entire careers and livelihoods were just thrown into chaos. But there was a real push for accountability. In the aftermath, a special investigations team was set up, and eventually over 50 directors and owners were charged in court for their alleged roles in the whole disaster. So the fallout wasn't just financial, it was legal too. So after all the dust settled, what did we actually learn? I mean, a crisis this big forces change. It forces regulators and it forces everyday savers to ask some really tough questions. So let's look at the legacy of this collapse and what it means for Ghana's banking system today. So, what are the big takeaways? Well, for one, the system is without a doubt structurally tougher now. The Bank of Ghana raised capital requirements and really tightened its supervision. We also learned that not all banks are the same. The larger, more established ones managed to stay afloat. And for all of us savers, it's a huge lesson that crazy high interest rate isn't everything. Stability and good governance matter just as much, if not more. And this brings us to our final thought. The reforms have definitely made the system tougher, yes, but this story is a permanent reminder of just how quickly things can unravel. The system is stronger, for sure, but have the underlying issues, that moral crisis, really gone away? It leaves you with this one lingering question. Is your money ever truly safe?